Good morning and welcome to VSA Capital 5-Minute Morning Miner on Wednesday, the 21st of September. And I'm back and I'm with Paul. Paul, how are you?
I am well, thank you. How are you?
Slightly annoyed cycling home yesterday. My front fork snapped. So I've had to come in on my son's bike this morning. Bloody awful bike. I may have to buy a new bike, Paul, but I've had that one for 45 years. And I love it. It gets me to work every day. Anyway,
it's gotten good use out of it then.
I've had very good use out of it. It's a bit like Trigger's broom, though. Everything's been replaced. Not an easy morning this morning either. Obviously, Putin has decided to mobilize his reserve armed forces, bringing reservists into the war and also threatening nuclear weapons. He really is a pain in the neck, isn't he? But there you go. Let's turn to mining. And what do you want to start off with, Paul?
Well, let's start off with Cerrado Gold, Shanghai Mining Club member with projects production in Argentina, but a development gold project in Brazil. Latest infill drilling results on the Serra Alta project showing very thick continuity of very good grade open pitable material. Examples of drilling results including 20 meters at 3.8 grams, 53 meters at 1.6 grams, 70 meters at 2 grams, and on and on. So this particular pit mineralization just proving up very nice, thick, and continuous for what ought to be very economical and high margin sorts of production for them. So all that good news for Cerrado as they work on completing this program. It takes them a little while yet, and the feasibility study will take some time, probably yet another 6 months or so.
Yeah, there's not much news out in the UK. Most of it's overseas, isn't it? Might want to mention Farfinch, which is ASX listed, and mining gold in Mali. I think they've just refinanced stuff.
Yes, they have 2 separate releases out from Farfinch here. Big refinance program underway for them as part of the proposal or idea to put a sounder financial footing underneath the Marilla operation as they attempt to do some expansion work on the Marilla mine itself. The 2 separate releases, one about the development of the financing deal, which included a big proportion of a mining contractor converting their owed fees and debts over to equity to Farfinch, but also a capital raise and a shareholder rights raise as well, toward something in the order of $90 million that they're trying to put together all told. And they've also set in a separate release a target for over the next 18 months to be producing about 30,000 ounces quarterly over the next several quarters, but they'd like to get that in a sustainable basis even higher than that out there toward 2024, 2025 or so.
Another one that just caught my eye a little bit, Paul, on the ASX is Pan Asian Metals, because mining in Thailand has always been, very difficult and disputed, and it's just bloody tough. But this is a lithium explorer, and they're looking also in the mica, aren't they? Which obviously is of interest to us down in Cornwall. There's potentially a lot of mica in the English China clays. What's the news there?
Yes, Pan Asia Metals ASX listed. They have a deposit called Rung Kiet, which is a historic tin prospect that where the tin is located in lithium spodumene pegmatites. It's a stringer or nested set of veins which run through Rung Kiet. It's relatively small here at this point, but with continued drilling on Rung Kiet, which will take place for some time yet, that looks pretty good. The new license that they picked up is about 8 kilometers from Rung Kiet, and its style of lithium mineralization is the lepidolite mica. rather than the spodumene veins style. And the surprise for them that they announced is that the prospective zone seems to be a good twice as big as they had initially thought when they taken a closer look at it, now that they have the license secured. So that gives them a lot of confidence that they should be able to add significantly to the overall total resources in the combined licenses as they get the drilling done.
Well, as I say, Thailand notoriously difficult though for mining. I thought finally, Paul, I might just give you a quick view. I've been talking to a lot of people about the vanadium price, see if you agree with me. This is unrehearsed. The problem at the moment with the vanadium price, as far as I can see, is that clearly at the moment, virtually all the vanadium is used for the steel industry, and the steel industry is with the global economic sort of crisis going backwards. We all obviously hope it'll go into vanadium flow batteries, but the demand there for the electrolyte really isn't going to pick up for a couple of years. And what I'm noticing is that more and more and more fly ash is being used as to extract vanadium from that. And in particular, the oil companies, we saw Shell and Aramco announce a huge joint venture to take vanadium out of the old catalysts. But also certain countries which have heavy oil, the vanadium is very high content in it. And it appears to me that we could be slipping back down from sort of the current $7.20 back towards sort of $3 range short term for vanadium. And that is going to really cause problems for the listed vanadium companies, because frankly at $3 they struggle to survive. What do you think of that theory, Paul?
Whether or not it's a question of whether or not the price actually gets down to $3, I think, and that's a speculative number, I think, just based on how severely the steel industry contracts here at this point, which creates excess inventory on a shorter-term basis into the market. From the battery outlook standpoint, we do need a lower overall vanadium price as a sustainable or predictable sort of a range of vanadium in order to make the electrolyte that much more appealing for that technology for fixed battery installations at the utility scale. And I think anything in that regard which increases the volume of vanadium that's available, whereas making this actual price on a longer term basis more sustainable, is a good thing. But as you say, $3 would be horrible if it got that severe, but I suspect it won't quite make it that poorly.
My view is purely speculative, but also as a chicken and egg. The vanadium producers actually need the vanadium flow battery industry to be successful, or else, frankly, their market isn't big enough. And it's a chicken and egg. For the vanadium flow battery industry to be successful, they need a lower vanadium price. And so actually the two sides really need to get together and coordinate it and find a way that they can all benefit. But
and that obviously is what we're trying. And there are
Sorry.
other commodity minerals which have the same issue, graphite being one, scandium is another one. They all have that same issue where the volume of current material is relatively tight and not very liquid, whereas if there was a lot more material out there at predicted cost, a lot more of it would be used.
Yeah, well, I'd say in vanadium, I think it's the oil companies with cleaning up. It's nice and green. It's ESG in their oil. They clean it up and take out the vanadium that are going to become the swing suppliers of vanadium, and why the price. I mean, to them, it's a waste, so they can price it at anything, and it's a benefit. And that's why I think I should be quite cautious on the vanadium price short term. It's a short term view as well. It can then bounce back up again. Anyway, enough of that. We've probably spoken for far too long. I apologize if that was boring to anybody. And we'll speak again tomorrow.
Very good. See you then.